When most people think about retirement, the 401k is one of the first things that comes to mind, but few truly understand how it operates behind the scenes. In this episode, let's explore what makes a 401k plan tick, from contributions to administration and everything in between. A 401k plan gets its name from the section of the tax code that allows it to exist. It's designed to let employees save for retirement while postponing taxes on their savings and investment growth. That's the core advantage, contributing money before it's taxed, letting it grow, and paying taxes only when it's eventually withdrawn. Many plans also offer the option to contribute after-tax dollars through Roth 401k accounts. These allow participants to pay taxes now and enjoy tax-free withdrawals later, as long as the rules are followed. At the heart of the 401k system is something called a cash or deferred arrangement, or simply CODA. This is what allows an employee to either take their pay in cash or choose to defer some of it into the retirement plan. The key word here is choice. Employees decide how much, if anything, to contribute. Employers cannot require contributions. These contributions are known as elective deferrals because the employee elects to defer part of their income. But setting up a 401k plan is just the beginning. Running it day to day involves many players working together to keep things fair, accurate, and compliant with the law. The plan administrator, often the employer, oversees the whole operation. They manage eligibility, keep employees informed, and handle official filings. When something goes wrong or a decision needs to be made, it's the administrator's call. Then there are the record keepers who handle the numbers. They track every contribution, run tests to ensure fairness, and produce reports that show how the plan is doing. Service representatives are the voices on the other end of the phone, answering questions from participants. And benefit services teams work behind the scenes to process paperwork, scan documents, and make sure everything is accurate. Attorneys help write and update the plan documents. Accountants review the financials, and actuaries may be brought in to test whether the plan meets certain requirements. Trustees and custodians are in charge of the money, investing it, tracking it, and making sure it's available when needed. They follow instructions from the administrator and record keeper to ensure funds are handled properly. Overseeing everything are the IRS and the Department of Labor. These two agencies make sure retirement plans follow federal rules and that workers are treated fairly. If an employee ever has a disagreement with the plan, maybe about whether they qualify for benefits or how much they should receive, there's a process to follow. First, they file a claim. The plan has up to 90 days to decide. If needed, they can take a bit longer, up to 180 days with notice. If the claim is denied, the plan must explain why and give instructions for appealing the decision. The employee then has 60 days to submit an appeal. The plan has another 60 days to respond, again, possibly longer, with notice. If the appeal is denied, the employee has the right to take legal action. The journey through a 401k plan can be seen in 4 phases. First is joining the plan. This is when the participant decides how much to contribute, what type of contributions to make, and where to invest the money. Next is managing the money. Participants may change investments, adjust contribution levels, or roll money in from other plans. Then comes accessing the money. Some plans allow loans or in-service withdrawals under certain conditions. Finally, there's exiting the plan. This can happen when an employee leaves the company or reaches retirement. They might take a lump sum, set up installment payments, or leave the money in the plan. But once someone is no longer employed and reaches the age of 70 and a half, they're required to begin withdrawing a portion of their account each year. The 401k is more than a savings account. It's a carefully structured system with many people working behind the scenes. Understanding how it all fits together helps employees make smarter choices and prepares them to take control of their financial future. And remember, tax laws and retirement rules can evolve, so always check with the IRS or Department of Labor for the most up-to-date information. Thanks for tuning in. You're one step closer to mastering your money and your future. In our next episode, we'll break down how contributions work, including annual limits, employer matches, and how to get the most out of your plan. Until then, keep moving forward.